Hi, I'm Mark from the Cash Flow Machine. Today, I'll show you how to generate $50,000 a year using smart option strategies.
Can you really aim for something like $50,000 a year from the stock market without day trading, staring at charts all day, or gambling on risky trades? The truth is, many investors pursue income goals like that, but it depends on your capital, your discipline, and the strategies you choose. What I want to show you today is how regular investors use 3 approaches to target monthly income, sometimes around $4,000 across different kinds of markets. It all starts with knowing your own monthly target. For example, if someone's goal were $50,000 a year, that breaks down to about $4,167 per month. From there, instead of guessing, you can build an income plan using simple, repeatable strategies. The first strategy is covered calls. If you already own shares of a good stock, you can sell a call option against those shares. Think of it like renting out your stock. Someone pays you a premium for the right to buy it at a certain price. If the stock never reaches that price, you keep both your shares and the premium. If it does, you sell at the strike price and still keep the premium. Either way, you generate income, though each outcome has trade-offs. For instance, if one position generated $300 a month in premiums, doing this across several positions could add up to a meaningful portion of an investor's monthly income goal. The second strategy is cash-secured puts. This is a way to get paid while waiting to buy a stock at a lower price. Let's say a stock is trading at 60, but you'd prefer to own it at 55. You sell a put option at 55 and collect the premium right away. If the stock never drops, you keep the premium. If it does, you buy the stock at your target price and still keep the premium. It's like being paid to place a limit order. For example, 2 puts generating $500 each could represent about $1,000 in monthly income toward your plan. The third approach is dividend-focused ETFs. Some funds, like QYLD or JEPI, have historically targeted higher yields and distribute income monthly. These yields can fluctuate, but for some investors, allocating a portion of their portfolio to these ETFs helps create a more hands-off income stream to complement active strategies. When you combine all 3, covered calls, cash-secured puts, and dividend ETFs, you create multiple potential streams of income that can adapt to different market conditions. In steady or rising markets, covered calls can provide premiums. During pullbacks, puts can help you acquire stocks at lower prices while collecting income. In sideways markets, ETFs can provide regular distributions. This kind of rotation and balance is what we call the cash flow machine, a structured approach designed to pursue income across different market environments. Now, to be clear, reaching a goal like $50,000 a year usually requires significant capital, often 6 figures, as well as patience and discipline. These strategies involve risk, and results will vary. The important part is focusing on consistency and building income gradually over time. If you'd like to learn more about how these strategies work and see step-by-step training, visit cashflowmachine.net. There, you'll find tutorials, resources, and a community of investors focused on education and building confidence in their investing. Thanks for watching, and remember, steady, disciplined action is what can help you pursue lasting financial progress. Disclaimer: this video is for educational purposes only and not financial advice. Please consult a licensed financial professional before making investment decisions.
Visit cashflowmachine.net to get started and subscribe for more practical income strategies.